What's going on, guys? Hope you all are doing well. This is your boy Mac the Trader. Welcome back to another video. So, a little tired this morning. Yesterday was Easter. You know, it was a long day yesterday. Very, very long day. It's currently 10:18. We've been in the markets for, let's see. And we still have a runner on this position. The whole thing's not even closed out yet. We were in the market for 16 minutes this morning. Have my little Dunkin' right now, okay? It's a sparked energy drink. It has a little bit of sparkling water. I don't know, it's not really the best, but a little caffeine to get the day started. Anyways, you guys see this trade here, right? I know you guys see this trade. Of course you see the trade. We just took this trade, and we still have a runner on. So far, this trade has made us $2,095. It's made our investors $2,095. All right, let me get rid of this just to show you guys it's not a screenshot. Okay, not a screenshot. Okay, this is for today. Boom. Okay, this position right here. So let's break it down. Let's break down why we took the trade, why our investors are up money right now, and why, now that the Mac Trading Academy mentorship is now open, why you should come over, live trade with me, take advantage of the information. All right, I mean, we've been doing this for 2.5 years now. And some of you, okay, especially within my Instagram DMs, some of you have been saying things like, Mac, why did you switch the strategy? Guys, if you go back to my old content, trading the index markets, the only thing I'm doing differently here is I'm not looking for higher time frame sweeps of liquidity. That's the only thing I'm doing differently. And the reason why is because certain confluences that we look for usually overlap with higher time frame confluence as it relates to liquidity anyways. It's the same strategy and the same concept. And some of you guys are telling me that it's different in my Instagram DMs. I might actually post it too. I had a little conversation with this guy. He was like, you're changing your strategy and this and that. Who cares? I can change my strategy to an EMA strategy and still be profitable because of risk management and emotional psychology, right? And the system is made up of 3 pillars, but this is not a mentorship video, so we're not gonna get into it. You guys know I'll go on a long rant and I'll be talking about that for forever. Anyways, let's get into the video. So here we can see we have what I like to call my accumulation model. I have not seen this being taught anywhere. Some of you guys are saying these are ICT breakers, ICT concepts, things like that. If you think this is an ICT concept, I don't know what to tell you. But I might actually brand it as an ICT concept because so many of our ICT traders who were not profitable just using ICT concepts, they come over here and they use this system and they follow the rules, they have their discipline set out, and they're very profitable. Or they weren't profitable before, they were trying to become funded before with ICT concepts, and now they're funded, right? So if you are an ICT trader, I implore you to come over, okay? Ask me questions in the comments, in my DMs, ask me questions, and let me just show you what other ICT traders have been able to do with the information. I'll just do that, right? So this is what I like to call my accumulation model, okay? We have point A, point B. Price manipulates, we trade. It's the same pattern that you always see, guys. Accumulation, manipulation, distribution. That's all this is. We see that price manipulates above this high here, okay? And then what happens right after that, right? We start to break through our accumulation. Now, this was a risky entry here, okay? This was the inefficiency within the first leg of the distribution. This is a little risky of an entry, okay? This would have been a safer entry, okay? And then, I mean, you would have still hit target, as you guys can see, okay? Now, I am looking for price to trade, I want to say right here. I'm looking for price to trade into this level here, and then we'll see how it reacts. After it trades into that level, I'll be at least looking for price to trade back into this region here. So I'll be looking for something like this. All right. Where was it, right? I think it's this level. I don't want to go to the higher time frame right now, so we're just going to say it's sellable. Let's see. Let's just go to the higher time frame. Perfect. All right, so I'm looking for something like this. Then I'm looking for price to at least trade back into this region here. All right, and if we can trade back into that region, that'll be around a plus 2R for us. Okay, now I don't do too much prediction within the market. Anyways, so I'm looking for price to do that. And then hopefully we'll be up around 2%. We'll see what happens. Okay, now the reason why we are so profitable, okay, I can give you the strategy. I can give it to you for free, but the reason why we are so consistent and profitable is because of how we target. All right, and that's something that I'm not going to teach freely. All right, you guys can see that there's standard deviations, but how do we select which standard deviation to go to, right? Because sometimes you see we'll set 4 standard deviations or 400%, okay, of that manipulated range. Sometimes you'll see 3.5%, okay, or 3.5 standard deviations, which is 350%. All right, sometimes it's 2.5, right? So how do you know where to set your target? It's not necessarily about, when it comes to the strategy, it's not necessarily about entries and stop losses. That's what so many traders focus on. It's about targets, because how many times have you had a trade get very close to your target or semi-close to your target and then reverse on you, or go into profit and then reverse on you? I bet you it's been a lot, which is why you move your stop loss and profit. We only do that if we have runners, okay? Because usually, more than likely, based on our statistics, okay, and percentages, usually price within the distribution leg is going to hit a certain standard deviation. Now, this is not an ICT concept, because if you look at ICT concepts, I've seen other traders who are teaching ICT concepts say price is going to reach for 2 to 2.5 standard deviations, right? So that's what you target. But as you guys can see, I don't always target 2 or 2.5 standard deviations, and price still hits my targets. All right. So we do things a little different. It is proprietary information. Those of you guys who do join the mentorship, you will have to sign non-disclosure agreements, okay? Because this is something that I have not seen other people do, and this is something that it's taken us a lot of time to kind of figure out and put the puzzle pieces together. But it's all been worth it, because we just made our investors $2,000 in 16 minutes, and I'm done for the day. All right. So I'll catch you guys on the next one. If you guys do have any questions, please ask me. All right. Ask me questions, guys. If you have any question at all, whether it be anything, literally anything, just feel free to ask. All right. Catch you guys on the next one. Peace out.